Very good afternoon. Let's take a look at the markets. Asian stocks closed mixed in today's session, with the latest US-EU 15% import tax trade deal having lifted sentiment somewhat. Tokyo lost ground today following a rally last week following the conclusion of Japan's trade deal with the United States. The Nikkei share average declined by 1.1%. The Hang Seng Index ended the session up 0.7%, while the Shanghai Composite Index rose by 0.12%. US markets ended last Friday in positive territory, continuing to flirt with record highs. Optimism around trade talks was said to have positively driven sentiment, with investors also digesting a slew of trading updates and company results. Trade deals have now been concluded with the EU, Japan, Indonesia and the Philippines ahead of the 1st of August deadline, while talks with Canada are said to have deadlocked. The Dow Jones Industrial Average rose by 0.47%. The S&P 500 gained 0.4%. While the Nasdaq Composite Index ended up 0.24%. All right, the all-share index currently is trading 0.2% higher at 99,127 index points. The rand is trading at 17.86 against the US dollar, 20.83 vis-a-vis the euro and 23.95 against the British pound. Gold is trading at $3,337 an ounce, platinum at $1,424 an ounce, while Brent crude oil is trading just over $69 a barrel. All right, let's get into it now with James Turp. He's the Head of Investment Strategy and a Fixed Income Portfolio Manager at Sanlam Investments. Thank you so much for joining us, James. So the latest trade deal between the US and the EU is a positive turn of events following President Donald Trump previously threatening 30% import tariffs. How has this played out in terms of the bond markets and particularly for the euro?
Thanks very much for having me, Nompu. And that sounds familiar, doesn't it? 30% tariffs and coming in at 15, of course, as you say, the markets really enjoy that. So we've seen equity markets respond. We've seen currency markets respond, somewhat confusingly perhaps. But this is the sort of risk we can expect this week with all of the tariff news expected to culminate on Friday, on the 1st of August. Our own is of major importance to us, of course. But as we stand, we've seen it last week as well, these trade deals. And Europe, such a big region, sealing a 15% tariff deal with the US is good news.
Yeah. So like you say, August the 1st is just a few days away, and we know that negotiations are allowed to continue beyond that in terms of getting a more favorable trade deal. And of course, South Africa is one of those nations that will be hoping to achieve that. But from where you stand, what do you think we're likely to get? It seems as though 15% is the magic number, but will it be for South Africa?
Well, I think the good news, and you've got to hear me out on this one, is 30% is kind of in the numbers you might think at the moment. So any upside, anything lower than 30% would be seen and cheered by markets as good news. So that's hopefully how it plays out, but really difficult to forecast just how these discussions go. There's so many moving parts, and there's no real information on any progress being made at the moment. So let's just hope for some upside on the back of that. Of course, there's so much news coming out this week that is going to influence financial markets, our own included, for the rest of the year ahead, that this week's going to be a really busy one, Nompu.
Yeah, no, you do say that. Of course, we've got the Fed making a decision on rates, as well as our very own South African Reserve Bank. We've got a lot of numbers that will be coming out on the 1st of August, as well as, you know, the outcomes in terms of the trade deals. But just on the MPC decision this week, do you think that we're likely to get an interest rate cut? Some people in some quarters are suggesting that we might.
That's a great question, and what we'll be focused on this week. It's fully discounted. If I look at where rates were after the last MPC meeting to where they're being discounted now, looking forward, a full interest rate cut is being considered. Now, analysts are kind of split on this as well. It's not a clear-cut decision, but the market kind of is expecting one, and I think that's built around the voting pattern of MPC members at the last one at the end of May, where you had one member even calling for a 50 basis point reduction. So that seems to have been followed by an improving inflation position, of course, with the oil price and with Rand strength feeding through. The uncertainty, of course, is going to come down to the tariffs. We're going to see the Fed, of course, on Wednesday ahead of our MPC. They're not expected to move on rates at all. In fact, I think it's 1 basis point being discounted there. So that's almost a foregone conclusion. But their reason for holding rates is concern about inflation coming through from tariff negotiations. Will our MPC take a similar position? That remains to be seen. That could be the point that holds them off at this case. We know also they want to get inflation target to 3% is the number they're talking about. There's going to be some information about that shared potentially at the MPC. So it does depend on how that picture develops as well. We'll consider it. They spoke about including a parallel quarterly projection model of 3% CPI versus the current mid of 4.5%. So there's going to be a lot of information, but the market's expecting a cut at the moment. So if we don't get it, the market's going to respond, and that will be interesting.
Indeed. Well, we hope we do get that interest rate cut come Thursday. Thank you so much, James, for your time and insights. As always, that was James Turp, the head of investment strategy and fixed income portfolio manager at Sanlam Investments. After a short break, Juliet will have more news for you. Take care.